Okay, we have many stocks to talk about today. Strong earnings from ICICI, Kotak Mahindra Bank, a mixed bag from Reliance Industries, so plenty to talk about. Let's do one thing. Let's kickstart with Reliance and tell you how the numbers looked. Overall, the numbers were actually a mixed bag. If you look at it, the earnings were strong in the consumer business, but the oil to chemicals business had a bit of, some niggling worries there. Overall, the operational performance was not too bad. The oil and gas business was actually better than what the street was estimating. So that was a good thing, while the consumer-facing businesses were very strong. In fact, the retail business saw a revenue growth of 20%, higher than what the street was estimating. And retail is firing on all cylinders. The company saw 555 new store openings, taking the total count to a little under 19,000. It was a steady quarter from Reliance Jio as well. The subscriber addition was very strong. The average revenue per user went up almost 3% year-on-year. This was driven by a better subscriber mix and the ramp-up of its wireless business. The other thing for Reliance is that the balance sheet is also improving. So the net debt is flat on a quarter-on-quarter basis, adjusted for the JFSL demerger. So the core numbers will be up for you on your screen. Revenue coming in a little lower than what they did same time last year at 2.07 lakh crores. On the EBITDA and margin front, there was an improvement year-on-year, which is what the street would like. Margins coming in at 18.5% versus 17.3%, while the net profits were down about 11%. Let's quickly put the brokerage views on board. Citi has a buy with a target price of 27.50. JP Morgan has raised their target price to 3,040, so they are one of the most bullish on the street. Morgan Stanley has it at 3,000, while Jefferies has a buy with a target price of 29.35. Of course, standard disclaimer, Reliance Industries is the owner of the channel that you're watching. But Harshvardhan Dole and Balaji Subramaniam of IIFL Securities will be joining in at 9 a.m. to decode the Q1 performance.
Okay, all right, Sonia, thanks very much for that. Well, let's talk about the banking numbers, right? There's Reliance and there is on the other side ICICI Bank and Kotak Bank. Abhishek is here with what he made the numbers and what the street makes of it. Abhishek, morning, over to you.
Morning, Prashant. So to begin with, ICICI Bank's quarterly ROA and HDFC Bank's quarterly ROA, the gap is now 35 basis points, which is the highest ever that I've seen. Records galore at ICICI Bank. The gross NPA ratio and net NPA ratio are one of the lowest in last 8-9 years. Deposit growth of nearly 18% YOY is perhaps one of the best that you are seeing in last 9 quarters. And on a sequential basis, the deposit growth was 4.9% for ICICI Bank when compared to 1.6% for HDFC Bank. The unsecured book that continues to grow highest in last 23 quarters now. Its share is about 19.9% of the loans. The restructured book at just 0.37% is perhaps one of the lowest that you are seeing in last 10 quarters. Watchlist is the lowest in last 30 quarters, and overseas book also continues to decline, now at just 3% of the overall book. On the flip side, CASA ratio has declined to 43.3%, perhaps the lowest in last 12 quarters, and it is an industry trend that you are seeing CASA ratio decline for all the banks. Risk-weight assets to advances ratio is perhaps one of the highest in last 11 quarters, coming in at 109.3%, and core operating profit growth is at 0.15% on a sequential basis, which is the lowest in last 12 quarters. P&L, both the NI and PAT is a beat on our poll. Kotak Mahindra Bank, what has worked is the fact that deposit growth is pretty strong at 22% YOY, is perhaps the best that you are seeing in last 4 years, and sequentially 6.5% growth is perhaps the best in last 13 quarters. ROA continues to remain at the best that industry is seeing in Q1 FY24 at 2.8%. Net interest margin remains strong at 5.57%. They have declined on a sequential basis, but remains one of the best amongst large banks. Restructured book at just 0.2% is the lowest in last 3 years. Consolidated ROA and ROE are one of the best that you are seeing for Kotak Mahindra Bank. What has not worked is that retail portfolio growth of just 2.2% is on the lower side when you compare to overall loan growth. Subsidiaries performance is weak or soft on a sequential basis. Subsidiaries PAT have declined by 0.4%. Slippages have increased quarter-on-quarter, seasonal in nature that you are seeing with other banks, and CASA ratio at 49% is the lowest in last 22 quarters. PNL, NI and PAT is a beat on our poll. Back to you.
All right, Abhishek, thanks very much for that. Well, let's also hear out what the management of ICICI Bank had to say after their first quarter earnings in the conference call. Listen in.
The gross NP additions were 5,318 crore rupees in Q1 2024. Recoveries and upgrades of NPAs, excluding write-offs and sale, were 3,511 crore rupees in Q1 2024. The gross NPAs written off were rupees 1,169 crore rupees in Q1 2024. Going forward, we will continue to operate within our strategic framework while focusing on micro markets and ecosystems. The NIM for this quarter was 4.78 as compared to 4.9 in the previous quarter and 4.01 in Q1 of last year.
Yeah.
Okay, I think we have been saying that the retail deposits rate of increase has been slower than what has been the rate of lending. So the Q1 2024, the sequential decline actually reflects the lagged impact of repricing of deposits, which has been sort of partly offset by increase in loans and investment yields. Secondly, I think as we have been guiding even in the previous calls, the overall decline in NIM was very much in line with our expectations. But broadly, if I look at, I think it will be good to look at the full year FY24 in the context of what we did in FY23.
All right, well, that's about ICICI Bank, but let's focus on Vedanta. The numbers came post-market hours. Hindustan Zinc we got during market hours, so this is the numbers ex the India Zinc business. And that was a bit of a disappointment. The consolidated EBITDA, well, it came in at around 6,400 crores. We were working with a number of close to around 7,000 crores. And margin-wise as well, it was a miss in comparison to our poll. This after Hindustan Zinc's numbers coming in line. Looking at the segmental performance, zinc international business, zinc prices were weak, right? One of the weakest metal prices is what we've seen, that is on zinc. And that's why international zinc business, well, that got hurt. Oil and gas as well, crude prices did come down. You saw that, that contracted a little bit. While aluminium and power, the contraction was not that much. The other problem is the debt has moved up. It's moved up by close to around $2 billion on a quarter-on-quarter basis because they're paying out dividend in excess of what they're getting from Hindustan Zinc. There's that brand fee as well that they're paying to Vedanta Resources, which isn't so good news. So that debt ballooning up is as well not good, expecting the stock to open up in the red.
All right, expect the stock to open up in the red. That's on Vedanta. But plenty of other stocks. Paytm would be of high interest to viewers. So Abhishek is going to tell us more about that. There's also RBL Bank that he's going to talk about. Abhishek, over to you.
Well, Sonia, to begin with Paytm, sequentially a weak quarter per se. Total income is up about 38.3% YOY and about down 0.02% sequentially. Last year, same quarter, Q1, it was a sequential growth of 9% over year. Contributor profits have grown by almost 80% YOY and about 1.6% sequentially. Last year, same time around, the growth was about 34.5%. Contribution profit margin have expanded both YOY and quarter-on-quarter to about 55.7%. However, on a sequential basis, the net loss has widened to about 358.4 crore when compared to 167.5 crore in this previous quarter. RBL Bank, operationally, it's a strong quarter over there. Net interest margin has declined on a sequential basis but remains elevated at 4.84%. The slippages are at 555 crore. Annualized slippage ratio is perhaps one of the lowest that you are seeing in last 11 quarters. Asset quality has improved. So gross NPA ratio and net NPA ratio X of Q3 FY21, which was the dispensation quarter, is perhaps the best in last 4 years. Return ratios are the best in last 16 quarters. ROA of 1.01% and ROE of 8.4%. RWA or risk in the balance sheet is actually one of the lowest that you are seeing in last 13 quarters as the RWA to advances ratio is at 120.5%. PNL, both in terms of NI and PAT, it's a beat on our poll. Back to you.
Okay, thanks a lot for that, Abhishek. Well, in fact, we'll be joined by the management of RBL Bank at 10 a.m. later today. Well, turning our attention to other couple of numbers, then Sonal joins us to tell us about IGL and DLF. Morning, Sonal.
Good morning, Nigel. Let me start with IGL. It was a volume miss, though operationally the margins expanded on a quarter-on-quarter basis. Revenues down 7.5% quarter-on-quarter. We had EBITDA growing by 38%, margins at 18.8% versus 12.6%. But this compares with a poll of 19.2%. Profits were also up 33%, but slightly lower than the poll. As I said, it was a margin miss, though lower, but it still comes as a negative because volumes have actually declined on a quarter-on-quarter basis to come in at 8.2 SCMD, EBITDA per SCM largely in line at 8.6 rupees. Jefferies has a buy rating on the stock with a target price of 565. They say it's a margin-led beat. However, volumes fell quarter-on-quarter basis and they were 2% lower than what Jefferies was estimating. So this would not go well with the street. So that stock will be in focus. DLF, on the other hand, bookings were flat on a YY basis. Of course, Q4, that's the last quarter, they saw a substantial rise in bookings. So of course, it's a big decline on a quarter-on-quarter basis. But their balance sheet has improved. Net debt has come in at 57 crore rupees and the FY21 net debt was at 5,200 crore rupees. So there has been a big decline in net debt as well. In FY24, they have a planned launch of 11.2 million square feet, which has a sales potential of around 19,700 crore rupees.
An interesting fact update here as well, that the company has re-entered the Mumbai market after Prestige DLF is entering the market as well. This is via an SRA project. They'll be doing it via a JV. So this will be an interesting space to watch as well.
I'm not interested in any more developments here in Mumbai. With the way there are no roads, there are only potholes on the roads. We can do with a little less development and perhaps focusing more on the core infrastructure, whether it's the roads and bridges.
Absolutely.
But you need skyscrapers, right? I mean, island cities always build up. I mean, that's the only option because
Don't we have enough of it already?
It depends on who you ask. So yeah, well, all right. That's DLF and real estate for you. But let's focus back on financials, right? AU Small Finance Bank reported. Credit Access Grameen also reported numbers. So Abhishek, work cut out for you.
Prashant, to begin with AU Small Finance Bank, the net interest margin is at 9-quarter low of 5.7% versus 6.1%. The cost of funds is weighing over there. Operating profits have declined by 4.5% quarter-on-quarter. Bank has used a contingent provision of 62 crore, which actually helped the PAT this time around. Slippages have increased quarter-on-quarter to 317 crore versus 191 crore. Annualized slippage ratio of 2.02% versus 1.31% in the previous quarter. Asset quality has deteriorated a bit, and provision coverage ratio has declined sharply to 69% versus 75% in the previous quarter. In terms of our poll, the NI is slightly below our poll. PAT is ahead of our poll. Credit Access Grameen, the asset quality has improved over there due to write-offs that continue to remain over there. Disbursals are down 33.5% YOY. However, AUM growth has remained stable at around 40% YOY and about 3.7% sequentially. The NI growth is pretty strong at 19.2% YOY and about 14.5% sequentially. The net interest margin is at 2 or 3 year high at about 13%. PAT is also strong, growing at 86.3% YOY and about 37.5% sequentially. Back to you.
Okay, thanks a lot, Abhishek. That's AU Small Finance and Credit Access Grameen. We'll talk more about those in a bit. We'll be joined by the managements of Credit Access Grameen and AU Small Finance Bank later on the show. So do stay tuned in for that. That comes up a little before 10 a.m. Here's a quick recap of our top stocks. Stocks with positive news flow. There's Reliance, ICICI Bank, Kotak Mahindra Bank, RBL Bank, DLF and Credit Access Grameen. While stocks with negative news flow, Vedanta, Paytm, IGL and AU Small Finance Bank. But let's also get a quick handle on what's happening in the world of commodities. It's a big week because you have the US Fed policy as well on 25th and 26th. Manisha Gupta is joining in to tell us what's been happening in the world of crude. Manisha, hi, good morning.
Morning, Sonia. Thank you for that. Well, yes, the US Fed meeting concludes on Wednesday. It's going to be a big one. But apart from that, you also have the European Central Bank, Bank of Japan monetary policy meetings also coming in this week. So this is a loaded week in that sense. And we have seen the US dollar index gain ahead of that, which is putting pressure on commodity prices. So the crude oil prices did gain on Friday. We reached the 12-week highs onto this one. From those kind of highs right now. There also is a statement from UAE oil minister saying that they may take further action to support oil markets if the need be. But having said that, it is all going to be about the China introducing targeted stimulus measures. That is what the street is waiting for. Until now, we have seen stimulus measures come in for EV buying and consumer electronics buying as well. It really is about the real estate that markets are awaiting some kind of a liquidity injection coming in. Until then, the pressure in the metal prices also can continue. So if you look at the copper prices, we've seen 3% of decline in the previous week. And most of the metals right now, whether it's copper, zinc, steel, have started on a weaker note.
All right, so thanks very much for that. That's commodities in focus. We'll take a very quick break here. We'll be joined by the management of Ashok Leyland to discuss their first quarter performance. Numbers were a beat from Ashok Leyland. So stay tuned for that. More coming up on the other side.